What if I told you that 90% of traders who attempt prop firm challenges fail not because they lack strategy, not because they don't understand the markets, but because they can't handle what happens inside their own minds? Welcome back to the channel. Today, we're diving deep into something that nobody talks about enough, the mental game of trading prop firms. And trust me, if you're trying to pass a challenge or you've already blown an account or two, what you're about to learn could be the difference between finally getting funded and repeating the same painful cycle. I'm going to break down the psychological warfare that happens when you're trading with someone else's rules, someone else's money, and very real consequences. We'll cover the 5 critical mental battles every prop trader faces, the psychological traps that sabotage even experienced traders, and most importantly, the practical strategies you can use starting today to master your mental game. Let's get into it. First, let's talk about why prop firm trading is psychologically different from any other type of trading you've done before. When you're trading your own account, even if you're taking it seriously, there's a certain freedom. You can bend your rules. You can take a break. You can say, you know what, I'm going to be more aggressive this week. The only person you're accountable to is yourself. But prop firms? Completely different ballgame. You've got 3 psychological pressure points that create a perfect storm. Number 1, external rules with zero flexibility. Maximum daily loss limits, overall drawdown limits. Minimum trading days, profit targets. These aren't suggestions, they're prison walls. One mistake, one emotional decision, and you're done. Your account is blown, and you're back to square one, down whatever you paid for the challenge fee. Number 2, the sunk cost fallacy on steroids. You've already paid anywhere from $50 to $500 or more for this challenge. Every time you open a trade, there's a voice in your head saying, I've already invested money into this. I can't fail. I have to make this work. This creates desperation, and desperation creates terrible trading decisions. Number 3, the paradox of paper money with real consequences. Here's where it gets really twisted. You're trading what is essentially fake money simulated accounts, but the psychological weight is heavier than trading your own cash. Why? Because failing means losing your opportunity, your challenge fee, and potentially your confidence. The money isn't real, but the pressure absolutely is. This creates what psychologists call threat-induced cognitive narrowing. When you're under this kind of pressure, your brain literally can't think as clearly. Your peripheral vision narrows both literally and metaphorically. You stop seeing the bigger picture. You start making impulsive decisions. Sound familiar? Now let's talk about the traps that the prop firm structure itself creates, often unintentionally. Trap 1, the evaluation mindset. The moment you call it an evaluation or challenge, you've framed it as a test you might fail. This activates performance anxiety. Your brain goes into fight or flight mode. This is why some traders who are consistently profitable in their own accounts completely fall apart in prop challenges. Reframe. It's not an evaluation, it's a game with specific rules. You're not being tested, you're playing a game you already know how to play. This subtle mental shift can dramatically reduce anxiety. Trap 2, the profit target obsession. Most traders focus entirely on hitting the profit target. The problem is that focusing on the outcome rather than the process creates rushed decision-making. You start forcing trades that aren't there because you're fixated on that 10% target. Reframe. Your goal isn't to hit the profit target. Your goal is to execute your strategy flawlessly for the required number of days. If you do that, the profit target will likely take care of itself. And if it doesn't, your strategy might need adjustment, but at least you'll have clean data. Trap 3, the unlimited retry temptation. Because you can just buy another challenge, there's less incentive to treat each one as precious. You think, if I blow this, I'll just get another one. This creates carelessness. Reframe. Treat every challenge like it's your last one. Trade with the intensity and discipline of someone who knows they can't afford another shot. Ironically, this mindset often leads to better results and fewer needed retries. Here's the truth that nobody wants to hear. Passing a prop firm challenge is less about your trading strategy and more about your ability to manage yourself. You can have the best technical analysis in the world, but if you can't control your emotions, if you can't stick to your rules under pressure, if you can't handle the psychological warfare of this game, you won't make it. But here's the good news. Every single skill I've talked about today can be developed. Mental discipline isn't something you're born with. It's something you build, one decision at a time, one trade at a time, one challenge at a time. The traders who get funded and stay funded aren't necessarily the most talented. They're the ones who mastered the mental game first and let their technical skills support that foundation. So stop trying to find the perfect strategy. Stop looking for the holy grail indicator. Start working on the person executing the trades. That's where your breakthrough is waiting. If you found this valuable, hit that subscribe button and drop a comment telling me which mental battle you struggle with most. I read every single comment, and your insights help shape future content. Thanks for watching. Now go out there and master your mind so you can master the market.